Good afternoon. Welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for July 6, 2008. AccendoTraders.com. Effective trade plans delivered daily. Certainly want to wish one and all a happy Independence Day in this great country of ours. My family and I, we're out here at Myrtle Beach vacationing. So you can hear probably the audio quality is a little bit different, but we're still going to go ahead and get our trade plan done for this week and continue to provide effective trade plans each day this week. During the weekends, we want to make sure we look at some blogs, some newsletters, just to see what people are saying about the market. And we also want to identify how the sectors are trending as we position ourselves in our trades. And as always, we want to make sure that we have time to spend with our family. Although right now my family's at the beach and I'm sitting right here with you guys. So this week we had the market down. Now it's more of a consolidation down. When you look at what happened the previous 2 weeks, we're down 500 and a down. Big numbers. So we really had a nice sideways move this week. It was very volatile. And obviously the 4th of July being on Friday, we had a market close on Friday, half day on Thursday. Continued negative bias on the financial sector. We had more concerns with the rising oil prices in the energy sector. We had some earning disappointments, and the deteriorating state of the U.S. auto industry kind of sent the market up and down throughout the week. Monday was the close of the second quarter, and it looks like the second quarter was a little bit stronger than expected, coming in around 2%. Tuesday, we had better than expected numbers coming out from General Motors. And the S&P found a little bit of support right at that 20% retracement off the highs, which would be considered a bear market, and we did have that with the Dow and the NASDAQ. But so on Tuesday we found a little support at that 20% bear market signal. But then on Wednesday, Merrill went right on back at that auto industry and downgraded GM from a buy to an underperform, and also said that the potential for bankruptcy for General Motors is an option. And General Motors just said, well, we've got enough money. So they didn't really come back at it hard. They just kind of said, we've got enough money. The hardest hit sector for the week was basic materials. I mean, when we were looking at this Wednesday night, it was just unbelievable to look at X and all MTL and some of the basic material stocks we've been looking at over the past month or so. Really took a hit. Some concerns over the global economy. Economic data was kind of split. The June employment report on Thursday basically was right at expectations. It might have been muted a little bit since the day before. The ADP employment numbers were kind of bad, and so maybe people had already tapered their expectations. And GDP, again, was a little bit stronger than expected. Oil, oil, it is what it is. It's controlling the market. Traders are trying to determine what's going on with the Saudis' pledge to increase production. China is cutting their subsidy for the prices of oil in their country. But oil continues to remain at $140 based upon this whole supply and demand. There's a lot of talk about speculators, and I'm sure that has a part of it. But we have to consider the fact that the rest of the world is driving and using oil, so that is affecting that supply and demand. This week we've got nothing on Mondays, pending home sales, crude inventory, initial claims on Thursday. And so you can see nothing really that huge and impactful. We do on Thursday have the retail sales. Same store chain numbers is coming out on Thursday, so that will be a statement on the consumer, and you'll probably hear more talk about that stimulus package. Michigan sentiment on Friday, but nothing really that huge this week. Maybe some more on the pending home sales on Tuesday. So tomorrow again we don't have anything for Monday's move. Again, retail same store numbers out on Thursday. What's important this week is that you can see Alcoa has earnings on Tuesday, and Alcoa traditionally signifies the beginning of the new quarter earnings. So our third quarter earnings starting on Tuesday with Alcoa and the split plays that we've been watching. So let's go ahead and take a look at our sectors. So we're going to go through the sectors a little quickly here. You can see hotels, bearish. Basic materials. I mean, look how hard they got pushed down. Definitely going to go bearish. Probably a lot of profit taking here, but they're bearish now. And remember, the light volume that we had last week. So hopefully they'll come back. Right now, bearish utilities, blah, builders, bearish, casinos, bearish, coal. Really, one of our better patterns here. By definition, bullish. But you can see the doji here at the 50, so it can certainly drop lower here. By definition, still going to put them in the bullish. Chemicals, our pot, manufacturing, MLS, Monsanto, bearish now, broke the 50. Steel, bearish, broke the 50. You saw what happened to X. Railroads, definitely bearish. Falling 3 patterns setting up here. Banks, bearish. Biotechs, kind of in a blondness, not really doing anything. Drugs. I'm going to go bullish with this because you can see they broke the 50. Still need to make a little bit higher of a swing high here, but definitely potentially bullish action here. Internet stocks are definitely bearish. Gold, this consolidation pattern is planning out, so we hit the high here, and this is why we didn't get in it yet. Now it's coming back down. We'll see what happens. Software, bearish. Insurance, bearish. Oil services, still by definition bullish. We'll see if they can bounce up higher. You can see this wick basically goes to the bottom of this channel. Retail bearish, stocks, semiconductors bearish, transports bearish, brokers bearish, natural gas by definition still bullish, and oil index bearish. Okay, so now we're ready to begin the education portion of our video. And what we're going to do today, as I mentioned, I'm out here on my vacation with my family, and so I'm not using Trading in the Zone by Mark Douglas today. I just want to point out a new post that we have over at the blog.accendotraders.com, and it's entitled, Why Does a Market Hate Me? And what this really is about is something Dean who wrote the Why Every Trader Needs to Have a Trade Plan, and I got together, I wrote some things down, and he kind of fine-tuned it for me about this whole, why is the stock market against me? Why does the stock market have a personal vendetta against us? And it was a great post for you guys to go over and read. And I've got a portion of it for you here talking about, again, the difference between successful traders and those who are not is simply self-awareness. It's simply their ability to understand how they interact with the market. It has nothing to do with market makers, market manipulation, favorites. It's all about your trade plan. It's all about your system to interact with the market. And that there is no personal vendetta. The market is not out to get any of us. The market is just a stream of data. How many times have you heard me say that? It's just a stream of data. And you have to make a choice of whether or not you're going to be the kayak person, kind of waving the raft, the whitewater rafting, or you're going to be the bass fish, jumping upstream to lay the eggs. So both can be successful, but one is a lot more easier than the other. Similarly, again, I've always, people will say, well, why did this go wrong? And, all the groups I participate in, you hear all the negative attitudes, and the best way to answer those questions is, well, tell me why did you get in the trade? And a lot of times you'll hear, well, this newsletter said it, this video said to get in there, but no one can actually say why they got in. And again, I've said this even to myself that, for those of you who follow my newsletter here, my video trade plan, it has to be more than that. You have to be able to internalize it and have your own system. I hope that I'm a part of your system. I hope that I am hopefully educating people on how to develop their own system, but I hope I am not your system, because again, that is not a successful trading. You're not able to reproduce this on your own. So, again, when people say what went wrong, I always say, well, why did you get in? And that usually pretty much explains a lot. But again, it's not just for the first-time get-rich people. Even the successful traders or the more experienced traders also seem to have a level of frustration. So go to the blog.accendotraders.com, and read the whole article. A great post. Thanks, Dean, for once again coming through with some great stuff. So as always, to get the full podcast, remember the podcast version is about 30 minutes. It's got the new plays of the week. It's got sort of our wrap-up of our plays from last week. So definitely go ahead and get that podcast. If you want to subscribe to be able to get our Monday through Friday podcast, you have to subscribe to that. That's by a newsletter. AccendoTraders.com/buynewsletter.html. And again, we always thank those people who give us feedback so we know the type of listeners that we have. And again, blog at AccendoTraders.com. Why does the stock market hate me? I will see you guys next time.